Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to talk a little bit about a topic which some people have asked me through a variety of different calls over, a number of months, and this is related to electronic money institutions or neobanks. So for those of you who are not familiar, I'm going to talk a little bit about what they are, and specifically I'm going to discuss the topic of is your money safe, or how safe is your money, etc. And so these are institutions like Revolut, N26, Transferwise, Monies, etc., etc. There's like dozens of them, right? Mercury, etc. So they exist in a bunch of different countries. And so today we're going to talk about some incidents that specifically address the safety of the money and kind of what's going on there, as well as we are going to talk a little bit about what you should be concerned about or not, and how these operate and how they're different, etc., because I see a lot of kind of misnomers in this regard. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. If you like the videos, please give them a thumbs up. If you would like help with international banking, with relocating abroad, getting second residencies, citizenships, forming companies, basically what we can do is we can help you figure out what is the best international strategy for you, and we can help you to implement that strategy. And this includes paying the lowest legal amount of tax possible, forming companies, getting residency permits elsewhere, getting second passports, etc., etc. Oh, and if you want to help with that, you can reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or you can send a message through offshorecitizen.net. Okay. So EMIs, as they're called, electronic money institutions, is kind of the technical legal term that we have in the EU. They've created kind of these EMI licenses which are available, and the idea of that was to kind of introduce competition into the banking sector and have sort of a lower barrier to entry product or license, I guess, that's available. It isn't the same as a real money license, therefore this means they're not doing lending, they're not holding customers' funds, various things like this. And there's a variety of different licenses that you can get. So it's not a full banking license. We have this in Hong Kong, we have it in the US, we have it in a bunch of different places. And so these institutions have become fairly popular, and they're fairly popular for a few reasons. First of all, typically the user experience, the software, is much better than traditional banks. I often tell people, when I log in to, say, Bank of America, it looks like it was designed in the 90s, and it probably was. Whereas if you go into something like Transferwise or Revolut, it's a much more modern user experience, works way better, works easier. It's just frankly the way that things should be, and these calcified traditional institutions for some reason have no idea how to produce modern software. Not really sure why, but that is what it is. So that's the first advantage. The second is typically it's quite a bit easier to get accounts there. In this day and age, ridiculous though it may be, it has become challenging for people to open even personal accounts, often even in a country that they're living in, depending on the country. For example, in Malta, it's essentially impossible to open a bank account. It's ridiculous, even if you're a resident. And then for business bank accounts, it's even worse. So the ease of opening combined with this here has been great. Now, what I'll sometimes have people call me and say is, hey, they can close your account down for nothing. Well, every bank can close your account down for nothing. So there's absolutely zero difference in this regard. I will talk in a second about kind of some of the pieces you need to be aware of in terms of maybe the sensitivity on these institutions versus some other institutions, but this is not necessarily divided based on whether they have a real money license or not. So that's the first side of things. And then they'll say, they'll ask questions about your transfers. Everybody can ask questions about your transfers. Everybody will ask questions about your transfers. So neither of those things are differentiators. The third piece of objection that comes up is concern over losing the money. And this really, I think, comes down to people not really having an understanding of what's going on. So I'll hear people say, I'm not sure I trust that money with Revolut. Okay, why do you not trust that money with Revolut? And they don't really have an understanding of what's going on. Are they trusting some early stage startup that's holding their cash? Are they in a situation where, somebody can just kind of take their money and run off? What's going on here? Well, in practice, what actually is going on is they don't hold your money. So that's the whole point of an electronic money institution license. Electronic money institutions purely are a layer of software on top of the legacy banking system. Maybe they have their own compliance teams and things supporting this. So there may be some risk management. There may be a few different other pieces aside from that. but it's basically a software layer. So what actually happens is if somebody gets an electronic money institution license, let's say they go to Lithuania, which is the most popular place in the EU, and they do this, then what they do is they go and they get sponsoring banks for each currency. So it's really common to use the Bank of Lithuania for euros. Maybe you're going to use Barclays for GBP. Maybe you're going to use Chase for US dollars. Maybe you're going to use whatever. You're going to start running down the list, and for each currency they're going to have some sort of sponsoring institution, and so they get a correspondent account with this bank. So it's actually, your money is actually held with that bank. And there's a really good example of this. There was a product called Bitwala, which was sort of a hybrid crypto wallet slash bank account. They changed their name, I think, to Nuri or something like that. Anyway, they recently went bankrupt, and so this was a good example of seeing in practice what happens. And the whole point was they didn't hold your money. So all the customer funds were fine. The bank that actually was holding the funds, it's a well-known fintech that supplies banking services to a lot of these. They sent out an email to all the customers saying, just so you know, they're going bankrupt, all your funds are okay, they're with us, it's fine. And so it's worth understanding this segregation that happens, okay? Very, very important to see, especially, when you're spinning up, say, depending on where you are, there'll be different ways that this is managed globally, but, spin up an IBAN for you or whatever, right? There's segregation, and these institutions are typically quite well regulated and regularly policed in terms of what's going on with money, etc. I remember being a part a little bit with a company in Hungary, which actually had a real money license. And you're talking about the regulators were there all the time, like always looking at things, always making sure this stuff was going on. So in general, your financial risk associated with those accounts is not based on the EMI itself. Now, to be fair, a lot of these EMIs are pretty well backed. If you look at, for example, Transferwise or Revolut, you're talking about venture-backed companies with multi-billion-dollar valuations, big VCs behind them, etc. So, in general, this is a pretty credible, trustworthy institution. And I'm going to contrast it in a second on the other side of real money licenses. So I wouldn't be too worried about that. Now, in a very small institution, is there a possibility that there's some kind of mismanagement that goes on? Sure. Is there a possibility that you lose your correspondent account? Yeah, or that they lose their correspondent account? Yes, absolutely. Is there a possibility that they close your account for something? 100%. Now, let's talk about why this is. I've discussed this in some previous banking videos. What happens is, let's say that you're Bank of America or Chase, okay? So you have a direct relationship with the Federal Reserve, and as a result, you're not in a situation where you're going to lose this relationship. This will not happen, okay? So it's not like Bank of America is going to be cut off from the U.S. monetary system. It's not like Wells Fargo will be cut off from the U.S. monetary system. This will not happen because they are the direct connection. Now, let's say you're a bank in St. Vincent or a bank in Cyprus or something like that, and you're interfacing. You don't have your own relationship, so you have to get a correspondent account with one of these other banks. Now what happens is that two things go on. One, in addition to the compliance at the Bank of America level, for their own stuff, say they're taking the correspondent account through Bank of America, they're going to be scrutinizing this other bank. So there's kind of this added layer of due diligence. And they're a little bit wary of this because they say, well, hang on, why aren't these people just coming to a normal bank? Why are they banking in St. Vincent? Probably because they want to evade taxes, they want to launder money, they want to, there's like all this suspicion that's built up around money coming from that kind of a jurisdiction with that kind of a relationship. You won't find this as much if you're talking about, say, a Canadian bank that has a correspondent relationship with one of the U.S. banks. Although actually some of the Canadian banks actually have their own correspondent relationship, which is a whole other conversation. So because of that, there's a much higher degree of scrutiny. In addition to this, because there's that higher degree of scrutiny, the bank that has to get the correspondent bank is going to also be very concerned about this, and they're going to add scrutiny because this is their lifeblood. This is their lifeline, right? Like, if they lose that correspondent account, their business is done. They can't transact anymore. We saw this mainly with FBME, for example, in Cyprus. They got flagged as a prime money laundering concern, and all of a sudden that took them out. Similarly with Banca Privada in Andorra, when they had issues, they were named as a prime money laundering concern, and basically wiped out the bank, froze accounts for ages, and there's all kinds of kerfuffle there that resulted in the whole industry of banks in Andorra kind of shifting around. So this is something that's really, really, really important to them from a business standpoint. And because it's really important to them from a business standpoint, they're going to scrutinize this more than if their business was less dependent on it, because they're not going to lose it. So hence, you'll generally have an easier time sending money through a bank that has a direct connection than a bank that does not have a direct connection. This isn't always true, but it's generally true. Now, let's talk about kind of these risks and look at kind of a real bank versus an EMI or neobank or whatever we want to call it. So this is more a function, the risks associated, etc., are more a function not of the license that you have. The license arguably probably makes you safer than a real bank in some other jurisdictions. So let's use, for example, something like Choice Bank in Belize, which had issues. Or we could look at some of the banks in St. Vincent or other parts of the Caribbean. So these are small banks. They have basically the same characteristic as an EMI, but they're actually holding your money, right? So in this situation, they're much more, first of all, the experience is generally worse, right? But they're also much more exposed to kind of their own internal fraud, because they may actually be holding the money, right? So if they're actually holding the money, then you're reliant on the local regulators, et cetera, in a way that's different if the money is sequestered with a sponsoring institution. So at the in a best case scenario, these small banks in kind of third tier jurisdictions are no more safe than electronic money institutions or neobanks in, say, EU or places like Hong Kong, etc. In a best case scenario, they're probably a little bit less safe because of kind of the nature of the local regulators there and the scrutiny that you're going to get as having money coming from that particular place. So both of these are subject to accounts being closed. I mean, that's true anywhere. I've had accounts closed at top tier banks in top tier countries, as well as you can have the subject to the same sort of thing in terms of losing their correspondent relationships at both of those. You won't have this at the top tier centralized banks. And so is it a more stable banking relationship and probably a little bit less hassle, not necessarily, but probably in major jurisdictions with the major centralized banks? Yeah, it is. Is it better when you're going to Bank One in Mauritius or Choice Bank in Belize? Choice Bank, famously, I'm mentioning it because it kind of had issues. No, you're not getting anything. We've seen something similar. If you look at some of the banks, there was two of them in Montenegro that had issues. Again, same sort of thing. Small banks. It was a real bank, but so what? It didn't protect you. It was no better than what you would have got from sort of one of these neobanks in this situation. So I think people should be more, their caution should be more focused on small institutions versus large, and institutions that they're based in a country where there's some sort of connection to the local economy, local government, etc., than to whether what the license is that the particular bank has. Okay, so that's kind of one of the first things. Now, I mentioned previously, you have sort of a too big to fail in certain situations where you do have, for example, like the U.S. Chase, Bank of America, Wells Fargo, etc. These banks will never go down. Okay, will not happen. Why not? Because the politicians have their money there, and they have an unlimited ability to print new money to bail those guys out. And they've already demonstrated that they're willing to print hundreds of billions of dollars to bail them out. So the ownership structure might change. The shareholders could get hurt. Bondholders might get hurt. There's a variety of different people who could get hurt there. It's possible in a very extreme circumstance that they would have some sort of negative effect on large deposits. I think that's even unlikely because, again, are the politicians going to take that for themselves? Probably not. It seems really, really unlikely. So these institutions are safe for a different set of reasons because they're structurally significant and backed by a central bank versus these other little guys who are not backed by a central bank, or if there is a central bank, like if you're talking about, you can go to Argentina, right? What are they likely to do? Convert your US dollars to pesos and, inflate the currency away. So that's not particularly stable. So now, could you be in a situation where the denominated, like the purchasing power of your money in the US could go down because the US dollar is going down. Of course that can happen. But that's a different problem than kind of bank insolvency risk or kind of issues with the underlying bank deposits that you have. So very, very important to notice that. Even if you look at, there's a case in China right now, somebody stole a few $1 billion from this bank, and there's all kinds of issues around it. And they're saying, well, what about deposit insurance, etc. But even in that case, where depositors will probably take a haircut, they didn't invest in actual savings accounts. They're putting the money into investment products that were kind of, looked similar to a savings account. So you can kind of see how that plays out differently. So by and large, in general, the bottom line of this is to say, yes, if you can get kind of tier 1 institutions, of course, do it. Sometimes you simply cannot get tier 1 institutions. And then in that case, if you're going to back down into some of these other institutions, EMIs are more or less equivalent from a safety standpoint to some of these others. Now, in general, would I want to keep a large amount of money in a tier 3 jurisdiction or an EMI? No, I would not. I think that generally speaking, the scrutiny that you're going to get, a lot of them have limits that they're willing to process, period. For example, one of them I saw has, I think it's 13 million a year. Some others have had 4 million a year, etc. So if you're over those thresholds, then you're going to be limited anyway. But and then sometimes they try and work around it by opening multiple accounts, which is kind of this crazy thing. Anyway, so that's one thing that ends up being a restriction. And then of course, yes, you could get additional scrutiny. And the additional scrutiny means that it's great for smaller amounts of money flowing through there, where basically the way they do it is they have thresholds on the amount of due diligence they need to do. So if you're under $10,000, usually it goes through pretty easily. If it's $10,000 to $50,000, it's going to get more scrutiny. If you're over $100,000, it's going to get more, and so on, right? So the larger the transaction, the more it is that banks are going to pay attention to this, and the more you're going to have to answer questions, and it's going to cause issues, etc. But fundamentally, that's going to be a case, no matter which institution you go to, past a certain stage, you're going to get more due diligence, and you're going to have to deal with it accordingly. And then if it's an unusual transaction, the same is true. So anyway, I hope that helps. If you have questions, put them in the comments below, and I will look forward to seeing you on the next video.